again. I mean, obviously we've seen, the market shedding lots of points in recent days. Volumes have been really thin, and everybody's just taking a wait-and-see approach ahead of the results season. That seems to be the case also today. How much longer can this continue for?
I believe it has bottomed up. We've reached the end of the trough. At this point onwards, the only direction you can go is up, because mainly we are seeing fund managers coming back. We're also seeing a lot of buying activity. The foreigners are active at 50% of the total market turnover today, mostly on the buy side. They comprise around 70% on the buy side.
All right, what we have seen though in the previous session, KPLC's new shares started trading. Impact on the KPLC counter, investors' response?
We have seen the NSE, the KPLC shares coming down as of yesterday and today. So mostly we can attribute it to a price correction. But I'm seeing it settling at around 2021. The fall really can't be attributed to the whole market coming down. I believe that for CMC, it's a unique case.
Let's talk about what's happening to the shilling. Few very modest gains against the dollar, but what we are seeing is a pickup with tea exports resuming to countries like Egypt. I mean, we've seen suspension of some of the auctions, but is that enough to keep the shilling a little bit resistant to the dollar?
Mostly we have seen the banks going long on the shilling. I believe that going forward with the Egyptian crisis having come down and tea exports coming in, I believe it should provide some resistance to the dollar.
Okay, but what we are seeing with regards to the shilling is a lot of corporates on the market looking to augment their dollar positions, largely because of what they anticipate as rising fuel import costs and this whole issue about the drought and rising production costs for them. How serious a situation is inflation?
It's a bit serious because today we can attribute the performance of the dollar versus the shilling to basically oil traders trying to hedge off their positions.
All right, other issues within the market that we should be considering. I mean, for the longest time, the focus has been foreigners re-entering the market, being very active, focusing on blue chip counters. Are we likely to see any surprises?
Tomorrow we have East African breweries releasing their results. From there, though, we can say that their top line has suffered a lot of losses. Has had a lot of impact from the alcohol control bill. But basically, I think okay, I don't expect much change from their financial results from the previous ones. Really, going forward, like I said, the market has reached the trough. We have nowhere else to go but up.
I mean, which would be your stock picks? And I'm talking about, the companies where, irrespective of what their results may look like, there's a lot of upside potential. And I'll point you back to East African Cables, for instance, where the results weren't particularly good, impairments in Tanzania, but the sense that telecoms and the supply chain in telecoms could provide recovery with the competition within the sector growing. And so the outlook for data services, etc., presents a very strong investment case into that counter. Which other ones are looking very good from where you're sitting?
If I were you, I would take financials. Anything in the financials, we'll be looking at Equity Bank and National Bank of Kenya. Those are my stock picks. National Bank is releasing profits for the first time after quite a long lull. We've got Equity Bank. We expect. Actually, my projections for dividends, I'll be putting it at over 50 cents, as opposed to 30 cents for the last year.
Let's talk about broader issues impacting on the capital markets in Kenya. The head of the Capital Markets Authority quoted at a conference that's been looking at broad issues like demutualization. What exactly does that mean when we talk about demutualization in Kenya, the process of getting stockbrokers out of the whole equity position of the market? How's it going to make the stock market work more efficiently?
The stock market has really been a closed club of the brokers. I mean, it's a company. It's been basically a closed club. With demutualization, we'll be seeing some of the barriers to entry being lifted. Like the price of a seat on the NSE is around 200, 300 million Kenya shillings, which is quite a lot for any budding entrepreneur who would like to take a seat. With the introduction with demutualization also comes a lot more brokers being licensed, and that means increased competition in that sector. And now the only way to win customers would be efficiency and ethical business practices. For the investor, it's a thumbs up. For CMA, it's also a thumbs up.
And finally, just on this broad issue, some of the other reforms are introducing better risk management systems, but also a reform on the bond markets just by introducing more mechanisms to make them work efficiently, over-the-counter trading. How's this going to support changes and gains for the bond markets and the secondary markets as well?
The Kenyan bonds market has mostly been has mostly been characterized by institutional traders. We have very, very few retail. With the introduction of OTC, we'll have lower transaction costs. And also with the reforms that are coming up, like we have the 30-year bond coming in, we'll be seeing a lot of retailers. All these need a mechanism, all these need a structure that will be able to support them. So basically the reforms that are aimed at opening up the capital markets look like they're on the right track.